Hey everybody, Jake here, TrendSpider, to go over the weekend update into the last day of October. We only have one more trading day in the month of October, so we'll go over the broad markets, touch on crypto, and then touch on some individual names, starting with the SPY as always. A big status quo changer here for SPY as we finally broke through this August 16th high VWAP band. Now, why I call it a band is because here's your original VWAP, right? So like you can see here that we've respected this on the way down, but we also had an area here back in September where we actually did gap above it, had a pretty strong day, and then absolutely gap down right after. So I do want to include that candle in the VWAP zone, and that's why I essentially created a zone that includes this area. So if you're wondering how I create these VWAP zones, that's exactly how I create them. So you can see here, essentially I'm just creating the zone right up to the top of this candle. And then you can see we actually respected this area almost perfectly back in midweek. And then we actually broke through it on Friday. So that's actually a pretty big status quo changer here. So the fact that we did close above this, obviously anything can happen in the market, but it really makes me point to more of a bullish move here going into the week ahead. However, we do have some big news coming out next week with the Fed, so also something to consider. But one thing I'll also mention is we had this classic SR flip, and you'll hear SR flip a lot in this video simply because SR flips are important. Support resistant flips, resistance support flips, they're all the same. SR flips is essentially the same as a RS flip, right? It's just support resistance flip. So you can see here, back in September into October, we had this previous area of resistance. We broke above it, pulled back, retested this area almost perfectly on Thursday and then Friday's open, and then we did move pretty hard to the upside after that. So SR flip in play. You've got this, I don't want to call it a channel because it's not perfectly parallel, but it's pretty damn close. You've got more of a broadening channel here, and you can see that we have plenty of room to move to the upside. If you look here at just your basic gaps above, you got a gap here above right around 408, give or take a few cents. Then you also have a gap that hasn't fully filled above all the way up to around 421.50, give or take a few cents. So all in all, I mean, it's really hard to be bearish here, although we do have that news that could easily make the market next week. But all we're doing is we're looking at technicals and we're saying, okay, where are we at? Where could we be? And this is definitely shooting more of a high probability move to the upside rather than the downside. So, the market does what it wants to do. But if we were going to take a random guess and make a random prediction going into next week, you do have these variables in play that would point to more of an upside than downside. And then, as I mentioned on the weekly chart, we do have quite a bit of upside here on that broadening channel here. So going into the Qs, we do have a pretty strong move here. Now, we did have this ascending triangle breakdown yesterday, and then we moved right back up to it. We actually broke down almost down to the 264, 265 area before we reversed after hours. But you can see here that this SR flip is no longer in play. So, I mean, for the most part, the main area that we want to break above is simply just this orange line here. So, there's no science behind this. It's essentially just retesting the previous highs here that we saw back in early October, that we saw back in the 25th and the 26th of October. So this is your main area at this point that you're going to want to focus on. This, let's call it, I hate to make exact numbers here. Let's just call it 484.50. So if we close above that, that's going to be really hard to be too bearish above that area. But all in all, a very strong candle here going into the week ahead on the daily chart. And then you can see on the weekly chart here that we do have this big falling wedge. Two decent candles the last couple weeks. And, plenty of room to move to the upside, similar to SPY here on the weekly chart. Now, going into IWM is actually one of the few names that have actually closed above the August high VWAPs. So we did just mention that SPY closed above the August high VWAP, but notice here that we've actually closed above this area 3 times in a row in the last 3 days. So very strong candle today. Makes me think that we may not be done with this move to the upside. You've got gaps above. You got a gap here that fills right around, let's call it 188. So that would be your target above here. So if we want to just draw that and keep it on the chart, that would be your zone above into next week to fill. Now, here's your bear case, right? You always want to have the bull case versus the bear case. In this case, your bear case is simply just an SR flip. So you've got this previous support zone, pretty much starting from the COVID lows, going up to June of 2022. We bounced off that area. We broke down through it in September, and then we're right back at this area now. So this is about as close as you can get to an SR flip without invalidating it as you can. So we're right at the top of that zone. Any further upside invalidates this potential support becoming a resistance. But all in all, a very strong candle on the weekly chart. And it's hard to really look at the bear side of things with this type of momentum in the market. And so, you always have to have the bull and the bear case. So, not saying that there's not a bear case. You could easily pull back and retest this August high VWAP. If not, you could easily continue down. But all of the probabilities are actually pointing probably to more upside here as we have that gap above. We've got this very strong weekly candle. And then, on top of that, we also have Bitcoin remaining incredibly strong for what we're kind of seeing in the broad market. So the main areas that I'm kind of that I am watching here on Bitcoin are, one, we broke out of this resistance zone. So, call it, sorry, I had to readjust those a little bit. But, call it resistance here from September to October, call it a breakout, and then a retest here in late October. So that's what we're dealing with right now, just an SR flip here on the daily chart. So you broke out, retested that breakout zone, and now you've got a pretty strong move to the upside. Bitcoin can really have some huge moves over the weekend when you do have these types of kind of moves, whether it's to the downside or the upside. Strength going into the weekend, I would assume Bitcoin continues to pump to the upside. And that's just from watching the market a ton. But we'll see what happens. But all in all, I mean, this is a classic SR flip, previous resistance acting as support now. And if we do continue to the upside, look at these just basic pivots here. September 13th, let's call it 22.5 all the way up to around 22.750. If we break through that, then we have that area above all the way up to around 25,100. Now on the weekly chart, we have a pretty strong breakout here on the weekly candle. We have this descending triangle breakout, and so many people think descending triangles are solely a bearish setup. That is not the case at all. Whenever you have a breakout to the upside through a descending triangle breakout, you generally have some pretty big moves to the upside. So if we were to take a look at where we could potentially go from here, I would call it the March high VWAP zone all the way up to around 23,800 all the way up to around 25,000. So that is right in line with this area above, this horizontal resistance area above, or let's call it potential resistance area above on the daily chart. So let's call it 24,000 up to around 25,100 is going to be your potential resistance above. But I mean, with Bitcoin breaking out, which is arguably one of the more risk-on assets in the market, it's really hard to just see the bear thesis here, but you always have to, right? Like, you can't just say, oh, this is mega bullish, I can't see the bear thesis. You always have to see the bear thesis. We could easily pull back, retest this resistance zone that we broke out of, and that would be down in the 18,000 area. So just always have the multiple perspectives in order to have zero bias. That is the biggest problem with any trader in the market, is having a bias, whether it's bull or bear. Just always be able to see both sides of the equation. Now, going into Tesla, I mean, we had a big week, right? Elon Musk closed on Twitter. A lot of people on the Tesla side of things were not a huge fan of him even getting involved in Twitter. But you can see here that, I mean, we double bottomed about a week ago. You can see here that we had a nice move up. We still have two gaps above. We have a gap that fills around 235.35. We also have a gap above that fills around 262.47. So, if we were to take a wild guess at where this goes, upside would make sense. But there's a big but here. We have the weekly chart that is still showing potentially an SR flip here on the weekly chart. So you have this previous support zone, this symmetrical triangle support zone, now acting as potential resistance all the way up to around 232 to 235. We did not close above that, so still, this is definitely still a potential SR flip, and we'll see how this plays out into the week a week ahead. But you can see here that we do have pretty much this weekly candle engulfing the entire last 2 weeks of price action. So once again, a pretty strong bullish sign, but we do want to stay neutral until price action proves itself. But all in all, the fact that we did pretty much take out the last 2 weeks of essentially range on the bottom and the top, took those out. We bottomed out around 198.50 and then topped out around 233.50. That took out the last 2 candles, and that is hard to say that is a bearish setup going into the week ahead, but we still do have that SR flip potentially playing out going into the beginning of November. Now, next one that we'll look at is Apple. Apple easily made the market today, just a huge move to the upside. One thing that I'll note here is we also have that August 17th high VWAP breaking to the upside. Huge move with this candle. Generally, if you were to look at what's going to happen next, a lot of the time you will have a pullback, retest this VWAP, and then continue up. Will that happen? It's to be seen, but all in all, Apple does respect technicals quite a bit. So retest of this area all the way down to, who knows, 151.50 would not really be out of the equation for me, but we will see. My opinion doesn't matter. It's what the market shows us, and price action shows us from here. So all in all, the fact that we did break out through that August 17th high is a big deal. Now, on the weekly chart, we do have just a continuation up after pretty much 2 weeks ago. We bottomed out right at the support zone. You can see here this symmetrical triangle. We did bounce last week. We continued up this week. Plenty of room to move actually to the upside here in the low 170s. So all in all, Apple is one of those names that are really leading the market. Some people argue that it's making the market, but yeah, I mean, all the way from let's call it 168 all the way up to around 174. That could be your resistance zone above. So plenty of room to move up to the upside. Now, going into AMD, this one has been a name that a lot of people have just kind of written off because it's just been absolutely brutal. And there may be some reasons. You do have this bear flag here still on the daily chart. Pretty easy to spot bear flag here. Now, if we do break to the upside and close above this area, let's call it in the mid 60s, then the bear flag is invalidated, and all of a sudden this gap above becomes an area to watch all the way up to around 60, let's just call it 68. So if we do break above this bear flag, which is easily possible, 68 would be my target above. And remember that just because there's a bear flag, all that means is we have a downtrend, right? We have a downtrend, we have a flag. That's what makes it a bear flag. The bear part comes from simply the trend. So if we're in a downtrend and we have a flag, that's a bear flag. If we're in an uptrend and we have a flag, that's a bull flag. So the bull or the bear essentially comes from the trend that has already been in place since this flag formed. but doesn't mean that it can't necessarily change direction simply because it's in a bear formation or a bull formation. You can easily have a breakout to the upside, and this whole flag gets invalidated. So all in all, I mean, if you look at the weekly chart, you do have this 2020 resistance that did have a pretty big influence on the reversal here over the last 3 weeks. So your previous 2020 resistance ranged from around 55 all the way up to around 59.50. You can see here that we did hold that area almost perfectly. We bounced off of it. We broke above it. We closed above it. So, you know, if I were to take a wild guess at where this could potentially go on the bull side, you know, we just essentially look at this previous area of support. That is now going to be your resistance area. So let's call it anywhere from 72 all the way up to around 74.50, 75. So let's just color this red to show that it's potential resistance. But I mean, we're at 62. If we go all the way up to around 73 to 78, or sorry, 74, that's a pretty big move to the upside. So keep that in mind as well. I mean, we have multiple perspectives here. We have the bear flag, but we also have the weekly candle showing potentially a very big move to the upside. And I'm not here to try to predict for you guys. That's not my job. My job is to show what the technicals are showing, both on the bull and the bear side, and that's what we've got. We've got potential bear flag on the daily. We've got a potential reversal on the weekly, all the way up to the low to mid 70s. So keep that area on watch, both on the daily and the weekly. Now, going into Netflix, this is one that honestly a lot of people haven't really been watching. I guess maybe some have been watching after earnings. We did get above the all-time high anchored VWAP here, so that was your main area. I'll just highlight that here with this orange circle. Now, we still have a gap above. We have a gap above all the way up to around 333, so there is more upside to fill that gap. However, if you look at the weekly chart here, we are kind of at this broadening formation resistance zone. So you can see here that we did kind of test that zone above. Will we break above it? I have no idea. That's for price action to determine. But if we do break above this area, let's call it 318, then it would be hard for me to see the gap not filling above all the way up to around 333. Last one is Microsoft. Microsoft is one that did not have an Apple type of move after earnings. So you can see here that we did actually test that August high VWAP here. We actually closed slightly above it, which was a big fake out. Gap down, huge. And now we have this pretty big candle here on Friday. So, you know, that's pretty much just following the market at this point. So if we were to continue up, you do have the gap above, the earnings gap, all the way up to around 246. That happens to be in line right with that August high VWAP zone, right around 246 as well. So 246 all the way up to around 248 is definitely going to be your area above to watch as potential resistance on the daily. And then you can see here on the weekly chart, I mean, we have this... I would call that about a perfect channel. I mean, these lines are almost parallel perfectly. So you can see here that we have bounced off this area now twice over the last 3 weeks. So, you know, if we were to retest this zone below, that'd be in the low 220s. If we did hold this area and actually try to move upwards, that target on the, let's call it the short to medium term, let's say, you know, a few weeks to a month, would be all the way up to around 272 to 275. Maybe even up a little higher, maybe 276, 277. So that would be your main area to watch. So 246, if we break above that, then definitely I would start throwing on the gaps. So remember, we do have the gap snake. So the gap snake or your gap automatic gap detection, we have two. This is your gap snake. This is essentially our old gap detection software. If you go to indicators and just type in gap detector, apply. Let's turn off the gap snake. And you'll see here that you can see all these gaps above. We have 1, 2, 3 gaps above that we don't necessarily need to fill, but price likes to fill gaps above or below. And so that gap above would fill right around 246. The next gap would fill right around 265. And then the gap above here would fill around 285. So your gaps are definitely the thing that you want to keep in mind on the daily chart. This descending kind of channel resistance zone above, right around, let's say 272 to 280 would be your area above to watch on the weekly chart. So, those are really the main things that I wanted to point out in this weekend video. Remember that we do have a 7-day free trial. You can try out the platform. We do have a sale going on as well. So if you do want to try out the platform, unfortunately without a free trial, but actually get a huge discount on one of our plans, definitely go to TrendSpider.com, check out that promotion. And if you have any questions, remember we do have that support team always there willing to answer any of your questions. And I appreciate you guys watching, and thanks again. Have a great weekend, and we'll see you next time.